Hello, everyone, and welcome back to the world's best investing podcast. Today, we're going to do a video which is about capital allocation. How do I pick between a conviction that I have, like Duolingo, and other convictions that are on the rise, pseudo convictions, not all the way there, but almost like IREN and Ys that I talked about in the past and everything. What I do is I break down the value creation process into components. And then I sort of assess my understanding of each of these components. My understanding of each component has to be 100% because what actually happens in practice, as we know, is that stock prices are very volatile, especially growth stocks. They go up and down 50% for no reason, essentially driven by narratives. However, over the long term, stock prices simply track free cash flow per share. So let's think about Duolingo. Duolingo is basically the number of users times the engagement. That's ultimately what drives free cash flow per share. If you have more users and they're more engaged, you can monetize more. And if you do so with a platform, then that gives you operating leverage, which allows you to bring more of the revenue down to the bottom line, which, if well managed and everything, and you don't dilute shareholders ridiculously. So if you have a shareholder friendly management team, that equates to more free cash flow per share. We have one major dynamic coming into the thesis now, which is AI. As we've seen, following the launch of ChatGPT 5, the market thought that was actually a headwind for the business. But actually, the only thing Duolingo does fundamentally to push those two fundamental components of the equation is create more engaging content. And as we know, AI is absolutely great for that if you have proprietary data, meaning if you have access to data that no one else has access to in terms of scale and quality. Why do I believe Duolingo does have that? It's because it's actually top of the funnel for the education industry right now. It's like any other Web 2.0 platform we've seen, like Uber, Netflix, Spotify, and so forth. They just dominate the environment. It's more obvious as time goes by. So it's particularly obvious for Netflix now, following the scenario in which everyone thought that competition from Disney Plus and HBO was too much in 2022. There is no guarantee that that's going to be the case for Duolingo. But for me, it's one of these platforms, top of the funnel, that's just going to dominate in the making. Therefore, I believe they have an absolute data advantage. So when people talk about AI plays like Lemonade, which I do, as I said, I do appreciate the progress they've made. I'm always thinking in terms of, it's fundamentally the same value creation process, but the question is always, do they have an absolute data advantage or not? Because things get weird over time. And so fundamentals get tested because the market is always trying to disrupt your operation. Every single additional dollar you make, your company makes, is an additional it's an additional incentive for disruption. So if you think about who has the absolute data advantage for insurance, it's going to be social media platforms. It's going to be YouTube. It's going to be Instagram, stuff like that, because they know you better than even you know yourself. So Lemonade is making tremendous progress, and you can see in my last update, the free cash flow per share inflecting upwards, the gross loss ratio declining, now having achieved healthy levels. But it's not, that component of the equation isn't as crystal clear to me. Does that mean that Lemonade is not going to succeed? No, I think they're making great progress, and my initial assessment of the management team was actually wrong, it would seem. But they just don't have that absolute data advantage just yet, right? So companies are not born with it. Companies have to get there and achieve it, get it. So Duolingo has had to fight actually with many competitors. In my view, they don't actually have competition, because what happens in the digital space is that if you have a marginal advantage in user experience, you end up having an exponential advantage in user adoption. So in MAUs, DAOs, and so forth. Just because for the consumer, the cost of picking between one app and the other is literally, moving a thumb a little bit. This is literally how the digital economy works. So I think there's so many exponential opportunities in the market now, and it's so incredibly volatile that giving into FOMO or JOMO, joy of missing out and stuff, is very easy. And so that would maybe encourage maybe encourage investors to make moves, right? So IREN is up big time over the past few months, while HIMS is relatively flat. Duolingo is down. So how do you manage that emotional volatility that comes with it, that desire to participate in the latest hot thing, you need to be very stuck into the fundamentals. So it's, for me, again, going back to Duolingo, why am I long this thing? It's just because it's, more users, more engagement, and AI is a tailwind. AI just makes it exponentially easier over time to push those two metrics up, and it's Duolingo is increasingly able to do that in a way that others will find exponentially harder to replicate, just because they have the absolute data advantage. Very simple. If you look at IREN, what I explained in the video this week is that now they seem to have this blueprint which enables them to just churn out data centers. It's a very hard thing to do. The world has scarce compute capacity. We have infinite demand. Assuming AI scaling laws continue to persist, which for now seems to be the case, it's a Tesla kind of thing. As I said, it's like the world is just not going to be able to get enough of these data centers, and you have this machine which you kind of pump, like the Ponke meme, and it just churns out data centers. It's how Palantir is up so much, because any single enterprise that wants to leverage AI needs a digital twin, and so Palantir's platform just churns them out. And with AIP and now AI FDEs and everything, they just do so at a decreasing cost, increasing speed, so time to value is collapsing, which generates more data, so it enables Palantir to better understand how to deploy digital twins per industry, per vertical, per industry, and then per function inside each vertical, right? So we saw warp speed with manufacturing for Anduril, and now they're doing that for ships as well. And so you're gonna basically see the infinite verticalization of the platform, with each vertical and sub vertical having its own data flywheel, which competitors simply won't be able to catch up with. So with IREN, if you break down the components, like what is the main driver of their ability to just churn out data centers? One, it seems extraordinarily good organizational properties, so they have a lot of process power, but it's fundamentally funded by mining Bitcoin. I'm not saying Bitcoin is not going to do well. I'm just not 100% on board with the thesis. So I love that they're now shifting towards AI, and that's going to be a bigger part of the mix. The process power is evident. The blueprint, obviously, or I should say, most likely works. And so it's looking like it's going to be an exponential growth story. Because, by the way, these are very strange times, but say the AI scaling laws persist. If they do so for 10 years, which is the amount of power, additional power we're going to need to power that is just inconceivable. So the volume of data centers these guys are going to have to churn out just to satisfy 2% of the market is just extraordinary, right? So it's going to be huge. But as we know, fundamentals won't be perfect all of the time, and then narratives will come along and the stock will go up 50% and then down 50% and stuff like that. So if I don't have 100% conviction on a fundamental pillar of the thesis, which is basically Bitcoin mining, then I'm going to have a tough time. Many of you guys have seen me go through this volatility. So we've seen HIMS decline more than 30%, a billion times this year. We saw AMD go down 50% this year and now up 97%. And Tesla, the same, tremendous volatility. Someone on X yesterday said, well, if you're still long Tesla, so you seem to be going for 10 baggers. And I said, if Tesla goes up 10x from here, I'll be up 300x in total. But along the way, there's many years of the market giving up on this company. And so when you look at quote unquote new companies like this, they're very hot. Everyone loves them right now. Times of the market essentially disregarding the company will come, and the stock. That is why you need to have a very strong grip on fundamentals. I don't have that grip on Bitcoin. So although I think that the repeatable data center blueprint combined with potentially infinite demand for compute has very high potential for exponential growth, and 100x or 1000x or whatever, because as I said, the energy story, I think the linear human mind would have the tendency right now to underestimate the energy story a decade out, let alone 2 or 3 or 4 decades out, right? I don't have a grip on the Bitcoin thing. So if I don't, I'm not going to be able to allocate. And as you guys know, my philosophy here is, it's often not so much about at what price you buy an extraordinary company, it's how long you hold it for. There are some notable counter examples of that, which basically confirm the rule, like Cisco. But if you buy an extraordinary company at a fair price, say like Amazon, and you look back in time, it doesn't really ever matter whether you bought it tops or bottoms. It seems to be a sort of heuristic among most of investors, which is, well, I don't want to buy at the top in this cycle. I want to buy at the bottom. The truth is, cycles are not real in that context, in that stock prices simply track free cash flow per share over the long term. And so trying to buy the bottom or trying to avoid the top, if you're a long-term investor, or I would say if you want to make any money at all in the stock market, by doing something that's not investing in index funds, you shouldn't be thinking like that. That's definitely not how I think, and it's worked very well, which is, look, I don't know what the stock price is going to do. Narratives will certainly come along at some, there will come times where investors are more depressed about this stock. Sometimes they're going to be more enthusiastic, but ultimately, if free cash flow per share goes up exponentially over the long term, you'll just make money. That's how I think about it. So a great example of this is HIMS over the past few months, with the whole HIMS is going to get sued. So everyone was absolutely convinced of that. And you actually had a lot of people selling. Then, I just said, guys, like, even if a lawsuit comes along, what really matters over the long term is that free cash flow per share continues to go up exponentially. Everyone gets sued all of the time in the pharmaceutical sector. Literally every single minute of the day, someone is getting sued. All the big companies have multiple suits going on. This is just part of the business. I really don't care about lawsuits so long as they're not an existential threat to the company. I don't believe the GLP-1 thing is going to be an existential threat, because ultimately HIMS is a platform. They deploy a growing volume of verticals which solve a growing volume of acute customer pains in a way that's increasingly harder to replicate. That's the business. Now we have testosterone, we have menopause coming up. I believe peptides are going to be approved by the FDA any day now. So GLP-1s are going to be a subset of the business. By the way, fundamentally, GLP-1s are a subset of the peptide business. Your body produces 20,000 peptides. Aging is your body not essentially stopping the production of these peptides and you losing function and capabilities. So it's all about free cash flow per share rising exponentially and how crystal clear you are on each of the components of the value creation process. So for me, as I said, IREN, I love everything about the thesis now. Founder-led, extraordinary process power, repeatable blueprint, looking at an infinite TAM, but they rely on Bitcoin revenue. Duolingo is so simple. To me, they dominate top of the funnel. They have a proprietary data advantage over everyone else, including Google, including Amazon, including absolutely everyone. And they have the process power required to increase the number of users, so daily active users and MAUs, and increase engagement, monetize, and do so in a way that brings more of the top line to the bottom line over time. If you look at Duolingo's free cash flow yield, so how much of the top line they convert into free cash flow, it's much higher than HIMS. It's abnormally high. And that's because these guys are what I call an optimization machine. 100x potential, absolutely. If you think about the education market, it obviously, it's everything at every single point in time is infinitely improvable, but especially education has been very quickly outdated. And Duolingo is just going to be the operating system to bring personalized education to every single person 24/7 and deliver value per dollar spent by customers at a rate which is just unreplicable by a human being or any traditional analog method that we've seen thus far power the education system. So this is how I think about capital allocation. Then a lot of people ask me, why do you continue studying companies if you have so much conviction in the companies that you hold? By the way, I hold just 6. I repeat this frequently on X. And why do you do the updates, and why do you do the videos, and why do you do the write-ups? And that's because everything is highly dynamic. One, the pace of innovation is accelerating tremendously. So the gap between spurts of innovation in the economy driven by platforms like AI now and stuff is getting shorter. I'm sure we're going to have something new come up in the next few years, which is going to be as big or even bigger than AI. Who knows? And then the narratives are getting, the volatility powered by social media and just sort of the confusing nature of the landscape is accelerating. because now, I mean, the stock market has always been a noise machine in the short term, but now with social media and so many media outlets and all the algorithm, it's getting worse and worse. Conversely, that's opportunity, because if you can stay dialed in on the fundamentals and you have your finger on the pulse of the narratives the market is producing, you can essentially violate these narratives and make a lot of money. That's how I made a lot of money with Spotify, with Palantir, when everyone said it was a consulting company, and so forth. So if you study businesses and then you make content such that you are held accountable for your opinions and for your thought process, that's going to sharpen it tremendously. In my experience, that has actually accelerated my pace of learning so much more than if I were just leisurely here alone in my office reading, as I was doing previously. Then turning that into a productized educational experience that pretty much anyone with intermediate knowledge of how to read financials can come into and do, and eventually love, and not only get value the first time, but just get more value every single time that they come back to it, because I'm permanently iterating on the product. That just turbocharges your learning process so much. So guys, I hope you enjoyed this video about capital allocation. By the way, I have 15 coupons available to obtain lifetime access to my course for $299 instead of $399, because the price is going up to $399 now following the release of version 2.3. So you guys get a 14-day money back, no questions asked guarantee if you don't like it. Check out the reviews of the product, link in the show's footnotes. Use code PLTR to obtain access for $299. You get lifetime access to the course, to every single version that comes after. As I said, we're now on version 2.3, and you get lifetime access to my community with now more than 500 deep divers that have taken the course to date. And so you'll see that the conversations are actually very enriching. What happens is people do the course once, it tends to blow their mind. Check out the reviews, by the way. This is not just me. Customers truly love this thing, and I'm so proud of that, and it's delightful. They do it once, it completely changes the way in which they look at businesses, and they start to look at them as I've showcased in this video. And then they keep coming back over time. They do deep dives, they share thoughts with other deep divers, and it's kind of this permanent learning process, which kind of emulates the one that I'm on, that has, I think, made me exponentially smarter over the past few years that I've been doing this. So guys, again, as I said, 15 coupons, they fly every single time I post them. Use code PLTR, link in the show's footnotes. See you guys on the other side. Also, if you enjoyed this video, could you please share this with one friend whom you think will enjoy it? These videos, updates, deep dives are for free, and so the only way this grows is with your help. So thank you very much in advance. Take care and see you next time.